If you think you can, you can. If you think you can't, you're right. Henry Ford. My friends, you can. 10 to 15 minutes a day is all we ask. Follow these charts with us continually. Follow them. Obey the rules that we teach. Learn every day. I hope that you have your weekly market worksheet printed out and you are filling it out during the course of today's program. Those are free. They're in the show notes. At the YouTube channel, at the website, you will see those listed. Please print out the daily market worksheet, the trade worksheet every time you do a practice trade, and the weekly worksheet once a week. At least fill out the weekly worksheet. Let's jump into it now. Things are going the way they're supposed to. Stocks in one direction, bonds and gold in the other. This is what we see happening over the course of today. Stocks are down, both our two indexes, the Nasdaq 100, the S&P 500. Gold and 20-year government bonds are up. Consequently, just so you know, oil, which we're paying more attention to because, of course, of the oil crash, which some people say started all of this, in addition to this alleged pandemic that we're being told about as the country shuts down for business. Gold also, consequently, down for the day. Did I say gold? Oil. Gold is up. So let's jump into the S&P 500. We see a huge down candle for the week. One of the biggest down candles, maybe the biggest down candle we've ever seen. A big down candle. Huge down candle. Price percent oscillator dropping off the deep end, friends. That does look like a hockey stick, doesn't it? When it crossed over, we told you, that was back on February the 28th. Derivative oscillator still gaining downward momentum. Price percent oscillator spiking down, lower lows. We go to the 2-day chart. What do we see there? Haven't hit the lows that we hit back on the Wednesday 2-day candle. Latest candle is drawn, representing Thursday and Friday. Derivative oscillator losing some downward momentum. Price percent oscillator, not quite the same plunge it was taking prior when we saw the spike down where the derivative oscillator spiked out on Monday. That's representing last Friday and Monday. But again, strong down movement. We are watching to see when we're going to hit a lower low. We go to the 4-hour chart and we are pushing away from the red signal line. Never had a crossover going up. We had a plateau where things slid sideways for about 2 days. That was in the afternoon on Wednesday through Thursday, Friday morning, and then started launching down, but still hadn't hit the bottom that they hit on Wednesday afternoon. So again, we do see the price percent oscillator pulling away from the red signal line, derivative oscillator going negative. So we didn't have a cross and a recross yet as far as another jumping in point on the S&P. Of course, the S&P jumping in point, for those of you who followed it and jumped in on the 4-hour chart, you well know it was around 279, and of course plumbing a low of 228.02. Beautiful. If you were in something like SH, we'll take a look at that. It's a single inverse fund. It is the short fund for the S&P 500. You can, of course, see where your jumping in point was and where things ended up. Somewhere around a jumping in point of 27, we'll say 28, and of course reaching a high around 3177 over the course of just a few days. So of course, is that beautiful? Absolutely. How did you do that? You followed the charts. You just followed the charts. The charts tell you what to do, my friends. I hope you're practice trading this and learning. Important learning curve and opportunity. What's going on the Qs? We see the Qs down for the day. Oh, by the way, S&P down 4.62%. Qs down 3.92%. Very similar to the S&P, spiking down on that weekly chart, continuing, reaching lower lows. Go to the 2-day chart. What do we see there? Didn't reach lower lows in this latest candle. Again, like the S&P, reached lower lows on the Monday, Tuesday 2-day candle. See the price percent oscillator heading down. Derivative oscillator losing downward momentum. That's because we didn't hit lower lows. It's oscillating up. And we go to the 4-hour chart, trying its darndest to cross over, going down. We'll see how things look on Monday morning as far as a potential jumping in point if this market continues to trudge down. Now, folks, I've told you about what a bull trap is. That is where people think that the market has bottomed out, everything's going to get better, and then they go and they start thinking we're returning to normal, everything's fine. Heard people talking about that over the last few days. Again, take the video. I will put it in the show notes. In fact, no, I'm going to put it at the end of this video. The Corona investing. I want you to pay close attention to that, particularly the bull trap. Remember, all of the momentum, all of the energy is down, 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 down on the stocks. Now, look at this. If we have a close on Monday with a crossover going down, your jumping in point would be right around noon on a practice trade going down on the Qs. What would that be? That would either be a put. You can practice trade puts on the Qs, or something like PSQ. Now, again, we're not a stock calling service. We're an education firm. We want you to practice trade this stuff. Look at what PSQ has tried to do. Look at what it's done over this period of time. You can see that it moves up as the S&P moves down. It is the short fund for, I'm sorry, I said the S&P, for the Qs, the Nasdaq 100. It's the short fund for the Nasdaq 100. So pay attention to that. Might have an opportunity to jump back into that. If you weren't already in it and stayed in it, might have an opportunity to jump into it on Monday. Just pay attention. I want you to practice trade that if it offers itself to you. Now, going to go back to the weekly chart. Leave stocks, go to bonds. Look at bonds recovering 7.52%. Hell of an update for bonds on Friday. We see that the price percent oscillator on the weekly chart is still heading up. Derivative oscillator positive, still losing momentum because of this crazy candle for the week. It is a solid red down candle, very, very small one. I would say that the wick on the bottoms, maybe 3 or 4 of the candle links, and then about 1.5 candle links on top for the wick, meaning indecision. Again, the long wick on the bottom would lead us to believe down, but again, lots of indecision. What do we focus, though, on? We focus on the price percent oscillator. Now, what's keeping us from jumping into a trade? A few things. The biggest is that the 2-day chart has not crossed back over going up. It may. Look at this, though. We have 4 down candles representing 8 days of down movement. And we can see that what gave us the energy to cross over was this crazy candle representing both Tuesday and Wednesday, the 17th and 18th of March. It gave a lot of energy to cause the price percent oscillator and the derivative oscillator crossover, both of them at the same time going down. Now, see the price percent oscillator moving up, derivative oscillator still very negative. The latest candle we have is a red spinning top again. The body of the candle smaller than the prior candle, leaving off about where the prior candle earlier in the week, that was the crossover point where it ended, and we don't have as much down movement on this latest candle. So what are we looking for? As the week begins, my friends, watch the 2-day chart. Your jumping in point potentially is on Tuesday. If there is a 2-day crossover, what we call a recross, that means it would be going in the same direction as the weekly. If that occurs, that is a potential jumping in point for a practice trade going up on TLT. May happen, may not happen. I can't read the future. I'm just telling you that's what I'm looking for if indeed there is a recross. Now we look at the 4-hour chart. It hasn't crossed yet either. Maybe enough energy on Monday to cross over, so keep an eye on things. And again, if you have that 2-day recross, then that would give the opportunity on Tuesday, near the close of the market, to potentially jump into an up move on TLT. It's good to see bonds recovering and moving in the proper direction. Appears there was a great deal of unwinding and a lot of people selling bond positions to perhaps cover margin calls on stocks. I don't know. I don't know what it was. I'm just following the charts. I don't have to know. You don't have to know. We don't have to have answers to everything. We just have to follow the trends. Does that make sense? It ought to. If you're looking for answers, you're going to get left behind. What we need to do, follow the charts. That's what I'm going to do. Put in your loss limits. Follow those when you hit them. When that's triggered, pull out if things don't go the right way in your practice trade. And again, always put in your good till canceled sell orders in those practice trades for the profits you think are reasonable, because with these crazy price fluctuations, you may hit post or pre-market. Now, don't forget, if you're a TC2000 customer like I am, follow that link in the show notes. If you want a $25 discount for signing up, you can practice trade at TC2000. It's brilliant, and it will allow you to paper trade all you want. And again, good accuracy there too for your paper trading. So I encourage you definitely to consider that. So that's what we're looking for as far as bonds go, a 2-day recross. Put that in your show notes, in your weekly market worksheet. Lastly, we go to gold. Gold up for the day, 1.50%. Look at that crazy down candle in gold. Gold crossed over, going down back on Friday, the 13th. We sent out that text notification to everybody saying that's what gold is doing. And what has it done? Well, you can see it moving down consistently throughout the course of the week. We look at the 2-day chart, 6 candles, actually 7, but I'm sorry, 6 days. 3 days of down movement. Now, 3 candles, 6 days of down movement. It's been a long day. So, what are we looking for? Well, we've not reached the same low that we reached back on Monday. We do see these down candles, derivative oscillator gaining downward momentum, price percent oscillator still heading down strongly on the 2-day chart. We go to the 4-hour. This is where it gets interesting. 4-hour chart, 2 days of strong down movement starting on Wednesday and then Thursday, sliding sideways as far as our candlesticks go on Friday. Now the market mood is still decidedly down. If you are in gold at this point, again, continue to pay attention to your practice trade. Watch this 4-hour chart, but it is not dispositive as to what's actually going on. You want to continue to watch both your loss limits, your profit bands, your profit and loss bands, and at the same time pay close attention to that 2-day chart, which is still strong down. The only weakness we're seeing there is we're not hitting a lower low. And of course, that weekly chart, which again is strong down. All things being equal, the market always tends to move in the direction. Not always. The market tends to move in the direction of the largest chart, which is that weekly chart, which is strong down. So watch the 2-day and the weekly. And again, God bless you all. This is a fascinating time to be trading, to be practice trading, and watching all that is going on. We have a great training for you today. It's on the weekend effect or the Monday effect. And I'm going to be offering over the course of this next week, starting Monday, we're going to launch again our 3-part series on options. Going to put that out. So you need to be signed up at the website chartingwealth.com. If you go there, put in your name, email address, you'll be on the list. Otherwise, you don't get the free trainings. And signing up is for free. So go to chartingwealth.com, do it. We still have copies of, I think it's the 14th printing of Charting Your Way to Wealth. If you want the book, want to support the work we do here for you for free every day, that's a great way to do it. Patreon support is also appreciated, my friends. Please, again, remember that adage by Henry Ford. Stay at it. You can do this. It's not rocket science. It's charting art. It does take 10 to 15 minutes a day. If you will just stick with it, you will figure this out. We are not looking for some crazy market inefficiencies and all. We're following established trends. You can do that. You can do this. You can figure this out. You need to practice with us 10 to 15 minutes a day. God bless. All the best. We love to hear from you. Write us CW@chartingwealth.com. Post your comments at the YouTube channel. God bless.